So going forward this year, I'm going to try to hit singles. I mean, the volatility is here. There's enough opportunity. But now, so for 2023, 2024, what did you do? What did everybody do? Buy the dip. Every 4 or 5% dip was bought. Okay. Well, this is looking a little different to me now. I think the dips are going to be a little harsher. And so there is a macro reason for this thesis that I have put together. So last week I put out 4 videos. It was actually one of our members' idea. He goes, Sergio, I want you to talk about, like, pick a stock, pick a position that you took, and I want you to explain why you did it, how you structured it, and the result, which I did actually on 4. It was Palantir, SMCI, MSTU, and a Palantir on the short side, obviously, and there was one more. I forget. Anyway, it's on the channel. So that today I'm going to do that with trying to put the macro picture with the technical picture together and put out my opinion. And again, it's one man's opinion. I could be right, I could be wrong. But since it's on YouTube and it's public, you can always go, hey, you were wrong. I'm like, okay, cool. It's not going to be the first time or the last time I'm wrong. But so here's the macro picture, okay? The macro picture has been getting weak. Now I understand why about September of last year, the first 50 basis point cut came by the Fed. They know what's coming. If everything is great, inflation is under control, full unemployment is happening, GDP is growing fully, Fed does not cut the rates. Fed was looking ahead and going like, okay, things are getting a little weaker to our liking. We need to preempt that. That's what Fed's job is. Fed cannot allow us to get in a recession. We just can't. So what happened is that they start cutting rates. So I was like kind of puzzled. Why are you cutting rates? Everything is good. GDP is good. Well, on Wednesday, well, not just, last 2 months in a row now, the consumer confidence index is coming out and it's tanking. It is tanking. So as some of you may know, 80% of our GDP is based on consumer spending in this country because we don't manufacture shit. Now, with President Trump in the office and waving the tariff bazooka all over the globe, right? Well, we don't manufacture anything. We import everything. When we put tariffs on, what's going to happen? What do you think the buyers of those goods from China, from Europe, from around the globe are going to do? They're going to pass that on to the consumer. Well, consumers are already stretched. So couple that with their credit card debt, couple that with the revolving debt, couple that with, the debt levels are through the roof on the consumer side. So consumers are already stretched thin. That's why their confidence is tanking last 2 months. And that's what started actually the whole thing on Wednesday. My point is, economy is slowing down. But the stock market, when I call the stock market S&P 500, triple Qs, they are still in the soft landing camp. Market has not priced in, forget a recession, a slowdown yet. So this will be that pricing factor because market's always 6 months ahead. Market's not going to wait until they see the signs of recession and then sell it off. They're going to sell everything off 6 months ahead. The recession will show up. In fact, when the recession shows up, market will bottom probably. That's how it works in our world, okay? So the macro picture is getting very cloudy, very murky. Fed's cutting rates on one end.